Okay, good afternoon, everyone. My name is Sam Metcalf. I'm the Midlands editor of thebusinessdesk.com. I'd like to welcome you all to our latest webinar entitled Access to Finance, not how, but when. For the next 40 minutes or so, we'll be discussing how the coronavirus pandemic has changed the mindset of business owners looking for finance, whether the various government schemes, while helpful obviously, could have muddied the waters somewhat, and whether the finance landscape what the finance landscape will look like in the new normal. And finally, of course, we'll be asking, when is the best time to access capital so your business can begin to grow again? And we've got a great panel for you today. I'm going to ask them all now to introduce themselves. So Steve, please.
Good afternoon, everybody. My name's Steve Walker. I'm the Chief Executive and founder of Art Business Loans in Birmingham. We make loans to small businesses between £10,000 and £150,000 as a CDFI that have been unable to get their full finance requirements from the banks. We've been doing that for 21 years, and we had a record year last year, lent £3.5 million. And basically, at the end of the day, CV came along.
Thanks, Steve. Rosie. Rosie, could you just turn your microphone on, please?
Thank you. Hi, I'm Rosie Smith. I'm the Bank of England's agent for the East Midlands. I'm generally an economist, so that's I've just done a presentation this morning on the effect of COVID on the economy, but my particular role in this, I'm also interested in the extent to which companies are able to get the finance they need to help them through this crisis. We normally just provide finance to banks. At the moment, we're running a particular scheme, which is the COVID Corporate Finance Scheme for the biggest companies. But I'm also interested in finding out from you about any issues you've got in obtaining finance from your banks, because we are also the regulator for the banks.
Thanks, Rosie. Andrew.
Morning, everyone. Afternoon, everyone. Owner of Blusource Recruitment Group. We recruit for accountants in practice, finance and HR individuals in industry. Owner of an electrical fire and security business. And invest in currently 4, previously about another 10 private individual businesses, either invested by myself or through the Turning Point Investment Angel Group, which was actually formed at the outturn of the last recession. So who knows? Maybe another one coming up. And also an accountant.
Thanks, Andrew. Last but not least, Chris.
Good afternoon, Chris Barlow. I am the COO of Birmingham offices for MHA Macintyre Hudson. We are a firm of accountants operating across the UK. We are, I think, with SM.
We're losing you a little bit, Chris. We'll come back to you. I just wanted to get all of our delegates involved today with discussing as much as possible. So anybody who's registered and logged in, if you have a question you'd like to ask our panel, please there's a Q&A button at the bottom of your screen. Please do type in your question, and I'll do my best to get to you. You seem to be back now, Chris. That's great. Let's make a start, and I'll come to you first then, Chris. In your opinion, do you think business owners are clear on what finance they need right now?
I think many of them are clear, but there's still a bit of confusion from the various conversations that I've had with clients over this period. I mean, to me, the first thing is making sure that they have actually looked at their own businesses and they have done various projections, because without those, quite simply, they haven't got a starting point as to where they can actually go forward. There is quite a lot of signposting out there. There's businesses like those on our call today, as well as their accountants. But I think we came into this process so quickly that any further signposting is always of use.
Okay, Steve.
Yeah, I think at the end of the day, what we've got, most of the businesses are looking for survival now. Rather than sort of anything else, and so they're looking for what's around, and I think as basically Chris said, we've got the British Business Bank site. If you actually go to the British Business Bank site and look at the schemes that have come up, then there's really clear details of what's available. But people have been scrabbling around, and I think that the vast majority of the businesses, because we've never been through anything like this before, have not necessarily been looking for finance, but they've been looking to sort of how do they survive in terms of, for example, grants and the furloughing scheme, and also whether at the end of the day if they can get some capital repayment holidays and finance they maybe have already got. So there's probably been less people actually, although the press says, well, there's a lot of people seeking it from the banks, but there's not actually, in terms of numbers, when you look at the percentage of numbers against the percentage total of small businesses, there aren't that many that have actually come at this moment in time. But the ones that have, at the end of the day, I think that the details are out there, but basically some of the issues in relation to getting that money have been well publicised.
Thanks, Steve. Andrew and Rosie. Andrew, you're a business owner. I'm not going to ask you whether you've accessed any government money. It's none of my business. But are you clear? Would you be clear on what finance you need at the moment?
Yeah, I think any business owner in normal times should always be looking at their business. They should always be looking at their forecast, whether that be forecasting to grow, forecast to go into a new market, new product, whatever. So the way that they finance this, and that just could be so it's normal working capital cycle, should always be on the agenda. I guess for many businesses, as Chris alluded to at the beginning, we came into this very, very quickly. Probably only 4 weeks beforehand, we were thinking, it might get England or the United Kingdom, and all of a sudden it did. And so I've spent probably the last 6 weeks busier than I have been for the last 6 months and 6 years even. But most of that has been forecasting and understanding, because yes, there's a little bit of clearing on how long this is going to go for, but no one knows. So even forecasting going forward, it isn't just one forecast, it's 2 forecasts or 5 forecasts or 10 forecasts. So it's about planning for a number of eventualities, which is a pain, because it's not just forecasting for one thing, which traditionally you might have done in the past. I know we're going to cover off some other things about it, but I think the key thing, the question was, are business owners clear? I think there has been in the last 6 weeks a lot of panic. I'm a member of a number of Facebook groups that immediately popped up and shared advice, and so. But I think the government reaction has been amazing, and we're going to talk about that one. But I think our own is clear. I think they need to be. I think nobody knows how long the outturn of this is going to be. Nobody knows whether it's going to come out like a champagne cork, or whether it's going to take 1 or 2 years to get back to where we were, Q4 or post Brexit, end of last year.
Okay, thanks, Andrew. And Rosie, what do you think banks, when companies are ringing up banks, do you think are banks saying to you that these business owners know what they want, or are they all over the place a little bit?
No, I think they know what they want. This is cash flow at the end of the day, and I'd echo what Andrew was saying. Most companies I talk to have done this sort of calculation. We know the cash is tight. What are the various different scenarios, and how much cash do we need? And they're approaching their banks accordingly. There's some canny business people out there, and they know what they need. Okay,
and Rosie, then let's talk about, I don't know how well you can answer this, but do you think the government, in conjunction with the banks, has done a good enough job in ensuring that businesses have the access to the capital they need to get through the current situation?
Have they done a good enough job? So being owned by the Treasury, it's quite an awkward one to give judgments on it, but I can do it on the basis of what I hear. It's amazing what's been achieved in such a short space of time. Decisions had to be made really, really quickly, and you couldn't design perfect schemes. You had to do the best you could quickly enough. So I think, given the circumstances, they did a fantastic job all the way along, and continue. And it's still the case now. These schemes are being tweaked. So we've seen the government, for example, putting in 100% guarantee for the smallest firms, changing the criteria that banks need to use when they're assessing businesses for the C-bill scheme to speed up the processing. And so whether it's enough for every business, I don't know. But if any business is not feeling like they've had enough, we're out there listening. We want to hear. and we're doing what we can to feed that information into the government so that they can make the tweaks they need to make.
Okay, Steve, have you been impressed with how the banks have worked with the government, or and vice versa?
Well, I mean, I'm slightly biased because we've got to remember the last big crash at the end of the day, during the last 10 to 12 years, there's been a whole alternative finance market that's spread out, and people have been encouraged to go to other alternative sources of finance as well as the banks. What we've seen now is a reversion because of the need for scale, speed, and of course access to finance. I think the one thing that I would agree with Rosie, that basically the government have done, and British Business Bank done a fantastic job in setting up the various schemes at speed. The CBILS scheme, remember, has been changed 3 times already, which is an element of confusion, but has been adapted. But one of the things that the government didn't do was actually make it very clear that these are loans, and that the funds that basically at the end of the day are being made are not being made by the government. A huge number of small businesses, particularly micro businesses, think it's the government's money, and in actual fact it's the funders' money. Now this is where I basically turn to Rosie and say, well, of course the Bank of England are making the money available at 0.1% to the banks, but not to the other funders. So there's a differential in terms of the rates that can actually be applied. You can't actually borrow money at 4% and then lend it at 2.5%. So there's a confusion there. But I think that the government, at the end of the day, made a statement at the beginning, £330 billion on CBILS. Well, it wasn't £330 billion at all. It was never, ever going to be £330 billion. And they've stayed with it as a sort of spinning item. The actual true figure was somewhere around the £58 billion mark. And that's what the banks lent in the whole of the last year to the SME market. So I think there's got to be a bit of truth being told. I mean, the 2 schemes so far have lent 16 billion, and the BBILS scheme has taken over from CBILS in terms of the money out the door because of the 100% guarantee. So I think there will be more changes afoot, but I think there should have been a bit more honesty up front from the government, and clarity that it's actually loans as well.
Did you want to come back on that, Rosie, or not?
Not particularly. No, we're not banding around numbers like that. I think it is true. It's banks' money, but I should probably add it's in banks' commercial interest to lend money. That's their job. So we'd hope that they'd have an incentive to do so. We think our figure is that we think 55 billion will be lent by the banks this year to companies.
Okay, Andrew.
Yeah, a couple of things. First question was, do we think the banks / the government? Obviously, normally you would hear projects of HMRC projects and government IT projects coming out, and you'd shriek with horror, thinking, "Gosh, they're not going to work. They're going to take 5 years, etc." To get the furlough scheme out, first of all, in a matter of weeks was absolutely amazing. Yes, there's been lots of complaints from businesses about it, but with great honesty, I think that is probably just having never dealt with things like that before, never having your gateway account to log on to HMRC and those kind of hassle factors. But I think what the government have done, what the with the furlough scheme, the bounce back loans, CBILS have been excellent. You did ask the question right at the beginning. Have I taken advantage of any? Yes, I have. I've taken advantage of 2 bounce back loans for 2 businesses that I'm involved in. Partly because, being honest to business owners, and I've said in the first point, you don't know, no matter what and how you forecast, you don't know how long, how deep, how fast it's going to be. So take advantage. It's cheap money at the moment,
Okay.
and it's going to be cheap money for some time. And it would be very wise. I know businesses don't like having debt, but the best time to apply for a loan or finance is when you don't need it, and when your accounts look good, and when you're not in chaos mode. If you, I know we'll come on to it, but one of the problems that hasn't actually occurred yet is when the outturn comes, and you need to grow your sales, you need to increase your overheads again, increase your staffing costs, your working capital requirement is going to be greater. That's what businesses need to plan for now, because if you're bang in the middle of all of that, your accounts, your business may not be in the better position as it is today to then apply for those loans that are available today. So I would say, yes, apply.
Okay, Andrew. Chris, Andrew touched on it slightly there. I've got a question from Jim. How is this whole situation going to affect tax planning going forward, Jim wants to know. I know that's a rather large question, but if you can give an overview, that would be great.
Yeah, crystal ball time, I think. But I think undoubtedly we are going to end up having to fund this over a number of years. I saw something in the paper yesterday that says that the government is giving various consideration to having to break the commitments that they made at the last election in terms of what taxes they move, whether there'll be a tax on pensions. I think ultimately there's going to be tax all the way across the board. I had a discussion with somebody the other day about whether corporation tax is the right way to do that, bearing in mind that potentially business profits are going to be hit, and therefore perhaps corporation tax isn't the way they'll go on that. But I think undoubtedly income tax, I do expect another sort of hit on pensions, and I wouldn't necessarily rule out a wealth tax. Because let's be honest, what's happening here is businesses will be taking the money which they will need. It will work its way through the system as it always does, and will sit with the wealthier people. And how will that money get back into the system without it being taxed? Yeah. So that's why I do wonder whether they'll look at some sort of wealth tax. Now, that said, that's not particularly conservative policy, but I think it may not be totally ruled out.
Thanks, Chris. Moving on then, we've had the range of government loans and grants, but are businesses, do you think, are there some businesses out there still looking for traditional forms of finance to grow? Is that still happening, Steve?
Not from our experience. I mean, as Andrew's quite rightly said, I mean, who would when you can get a 2.5% fixed rate for 6 years? I mean, it is cheap money. There are other benefits. There are massive benefits in this scheme for the business borrower at the moment in time, not the least of which is that basically they don't pay any interest or fees for the first 12 months. There's no PGs up to £250,000. Who wouldn't take it? I would just one little word of warning, which we've found out. You've only got one hit at the bounce back. You can only have one bounce back, and if you want more than 50,000, you have to, and you go to CBILS, you can't have the bounce back as well. So businesses will need to consider in their forecasting just how much they want now and when you're coming out, because at the end of the day, you'd have to repay your bounce back to get a CBILS, and the CBILS will be at different rates. They're not at the 2.5%. But having said, if you do get it from the bank and you're able to, and mostly the banks at the moment are sticking to their own customers, but I think they will open up to new customers in the course of the 6 months. And the other element, but I haven't seen any evidence of much money going out from other sources. And you've got to remember that CBILS in particular, if you're accredited, you're not allowed to actually prefer another service over a CBILS loan. That's part of the contract of the CBILS accredited lender. And that's what got the banks into trouble in the early days, where they were actually selling their own loans as opposed to a CBILS loan. Now they've moved it up to 80% cap. That's changed.
Right, while you're here, Steve, Jazz going to put a question from Jazz is going to put you on the spot. Are alternative lenders easing lending criteria during COVID-19?
It depends. None of the alternative lenders at the moment have got B-bills, and I don't think they will have at 2.5%. In terms of C-bills, there is that one we mentioned earlier on, which basically if you've got C-bills accredited, you are not supposed to be looking at the forward forecast. You're looking to confirm that the business was viable before, but you're not necessarily looking forward. I think personally that's quite dangerous. But at the end of the day, I haven't seen any evidence that basically there's been a lessening too much apart from that aspect in terms of alternative lenders. The big problem alternative lenders have got in the main is they haven't got access necessarily to the same sort of funding that basically the banks have got. So you will find that that differential in rates realistically is going to be there. So most of those funders are going to go out at somewhere between 10 and 15%, as opposed to the banks, which will probably be lending at, say, 2 to 5%.
Okay. Rosie, Jim again. Do you have an opinion on whether the Bank of England will eventually see the interest rates will just have to go up to fill the coffers back up? Ask Jim.
Yeah. So the answer is no. Interest rates are set to hit an inflation target. So we set interest rates at the right level they need to hit the 2% inflation target over the medium term. At the moment, we think that the 0.1% is what's needed to do that. A secondary objective of interest rates is to support the UK economy. So I think the point to make is that the government's bills will have to be repaid either through fiscal policy, so either reduce spending or increase taxes, or a combination of the two most likely. So government will need to raise money to repay its capital and pay its interest charges on its debt. So in a way, having interest rates lower actually makes the repayment of the interest on that debt cheaper than it would be if interest rates were higher. So it kind of works the other way than the question implies.
Okay.
Higher interest rates make it more expensive to repay the debt.
And Chris, in your experience, are businesses fully aware that this money will need to be paid back at some point? Are they planning for that?
It's certainly the point we keep making, but I think at times people are looking at it as a grant, but the message we keep giving is this is either a deferment or if you've taken options from HMRC and it has to be repaid, or it is something that is a loan and therefore has to be repaid.
Yeah, sure. Okay, then moving out, we're supposed to be moving out of lockdown now and on to the next stage, the government's next stage. Andrew, you've experience of angel investment. What role, if any, can angels play during this next 2 or 3 months?
I'll not say predator, whereas many people in actions later down the road may say predator, but I'll clearly say not predator. I think just advice. Speaking personally, I was involved, I sold a business just prior to the last recession. The timing was perfect. I didn't plan it that way, but it was. And then post-recession, I had some proceeds to invest in some other businesses, and alongside some other individuals, that's what we did for a number of years afterwards. So I think in many cases it's advice. We are in, you hear these terms every single day, we are in uncharted waters, we are in unnecessary times, but times that we've never seen before, even worse than the last recession. Because last recession hit certain sectors more so than others. And apologies to the banks that may be listening in, maybe they did shut their doors post-recession, and the advent of other lenders has really grown since then. So no, I think post a few months' time, there will be businesses that unfortunately haven't planned appropriately, or for whatever reason do want to leverage out a little bit. Maybe someone immediately looking forward to retirement, and that's completely gone out of the window now. So one way forward is to stage that retirement over a number of years and bring in an investor who can put a deal together and takes chunks of your business off you over, say, a 5-year program. That I like doing that personally, because you've got them still involved in the business at a time, and you're holding their hand and they're passing over the reins to you and the new management team over that time. But yeah, there'll be many good, solid businesses out there that have got an amazing track record, and if it wasn't for financing, they would have an amazing future. But unfortunately, it's down to the old adage that many people would say, how much of the cake do they want? If there's absolutely no cake, if they don't do something and there's no cake available, they've lost everything. So I do think that some people will have to be thinking openly about releasing some equity to investors and work their way through that. But many can see that as a way of gaining finance and at the same time expertise, knowledge, track record, black books, whatever phrase you want to call it. That's hopefully what investors bring to the table.
Okay, thanks, Andrew. Steve and then Chris. Let's presume a business owner's got this far relatively unscathed. When should she or he look to access finance to boost the business? And what are the dangers really of accessing finance to, if we can say, grow right now? Steve, first, please.
I think most people are in the survival mode at the moment in terms of growth because they don't know what's happening. That's particularly relevant in the sector that I deal in the micros and the smaller part of that sector. The ones that are going for the bounce back loans, which were mentioned by Andrew. I mean, why wouldn't you go now and get that while you can? It makes sense because there's no penalty for early repayment. I think the timing of when to go is really crucial. Both those schemes actually come to an end. The first one, CBILS, technically comes to an end at the end of September. I would probably guess that and estimate that it would be extended, but not so sure about bounce back. That ends in November. So you've got until then to go and grab the money that you can grab at the right cost and basically giving you the chance to do and put in plans your future. And I think that the actually sort of holding back doesn't actually make sense at this time. So it's basically survive because there's no penalty for early repayment, get some money, put it to one side. If at the end of the day you don't use it, then at the end of the day you can repay and that you've not lost anything. But it makes sense to actually borrow and put that nest egg to one side. A bit like the savings scheme mentioned by the Bank of England this morning. But that's what the banks used to do. But now, this is for small businesses. I would say this is the time to do it. And I can understand people's reluctance to borrow because they can't see what their future is. They can't see what their future is. But this is the right time to borrow as long as you don't actually sort of spurge the money away and you're just left with a debt in a company that's going to fail.
Okay. Chris?
I had one quick point.
Oh, sorry, Andrew, yeah.
Your question was really about, is this now a time going forward for angel investors? I mean, I'm guessing there'll be a whole multitude of people signing in and watching this. Some of those will be business owners themselves. I mean, it's an ideal opportunity for a business to grasp the challenges that are coming ahead and go and buy a competitor. And then, yes, you can do that with an investor or with all of the other varying levels of access to finance that there are, and do it and use it as an opportunity rather than, obviously, you don't know exactly what your market and how your market is going to fare for the next 6 months, 12 months, 18 months. But many businesses out there will use this opportunity now to go and take a competitor at a cheaper rate than they would have done 3 months ago.
Okay. Chris?
I'd echo what Andrew's just said and what Steve was saying. I mean, ultimately, cash is king in this situation. So, and echoing something that Andrew said earlier, if you're in a position to borrow, you better to borrow now, even if that money does little more than sit in the bank and give you peace of mind. I would say it's never too early to take that money and use it within business. I think that's the absolute key. I don't think there's a point ever that it's too early to take it, and then look for those opportunities as they come along. And there will be opportunities. There'll be businesses that unfortunately don't make it through this situation, and that gives opportunity for the investors to consolidate their marketplace.
Thanks, Chris. Then the question from an anonymous attendee. Rosie, I'll come to you first on this. Does the panel feel that in, say, 6 to 12 months' time from now, we'll have a raft of SME businesses with debt that they cannot pay? And would a private equity solution, debt for equity swap, for example, work in that situation? Rosie?
It's a crystal ball, really, isn't it? It's about what happens to the economy, and there's a huge degree of uncertainty around that. It depends how quickly they can make profits again and how quickly their demand comes back. 6 months, that sounds quite optimistic to me, particularly if you're in a sector that relies on consumer spending and consumer confidence. I mean, banks are supposed to be lending to viable businesses that were viable as of the 1st of March. So if they're not able to repay their debt, I just suggest it's external factors that have been involved rather than the business themselves. Yeah, we could have a bad scenario would mean we have lots of unpaid debt. it's just so difficult to say. And then it's a question of how you deal with that, how the banks deal with that, and how the government deals with that.
Okay, Chris, Andrew mentioned some Facebook groups earlier. I think I'm a member of this, one of the same Facebook groups as Andrew. There's a question come in about directors, and it says, does the panel think that the Chancellor will look to assist directors of limited companies who are remunerated chiefly by dividends? There have been chances to do this, but none yet. Do you think that will happen, Chris?
I think the dividend route is, well, firstly, dividend route is an absolutely legitimate way of paying yourself through a limited company if that company is making profits. It's almost been given a bad press, I think, by some of the way that the loans have been here. I think it's evident that there's various parts of the tax regime that are ripe for the Chancellor to have a look at. And I think that dividend is something he's going to have a look at as we go forward.
Okay. Another question from Jovan Roy. It seems exporters are being kept out of both C-bill and B-bill schemes. Is there any reason for that, Rosie? Is that right?
I'm not sure that's correct.
No,
I'll go back to the bank and ask again. Steve, it's probably one for you.
No. I think you find that did you say exporters?
Yeah.
Yeah, that's not a problem. Exporters can be supported.
Okay.
If you actually, the easiest thing to look at is the British Business Bank website, which gives frequently asked questions on bounce back and C-bills, and does a very, very good, what is the difference between C-bills and bounce back loans? And I think you find that basically, I think I know exports are included. It's not a problem. I think as long as the business is based over here and the manufacturer is over here, export's fine.
Okay.
Yeah.
Got a question for Bovinda Nagra, who points out, and a lot of people have pointed this out, that there is a discrepancy, isn't there, between the time of reply from the banks and the time the money hits the bank account. Some businesses it seems to happen straight away. Others, it takes a few weeks. Bovinda's asking if how processing time can be shortened. Is that possible, do you think, Rosie?
I'm afraid I'm not sure I can comment on that really. I think it's different between different banks.
Yeah, sure. Steve, what do you think on that one?
At the end of the day, I'm in the same position in actual fact. Our experience from our clients who basically we keep in touch with, who we're actually encouraging to go to the banks because we only lend if a bank says no. But their experience is exactly what's being reported over Twitter and in the papers, that there is a differential. I don't see any real reason why the bounce back ones in particular, once they've agreed them, that they can actually just press a button and credit the account, particularly if it's the customer's account. I don't really understand why there's a delay. And we've heard of people getting them in 12 hours. In fact, for more than one company as well, which is Andrew mentioned. But basically, I don't really understand that part of it. Must be something to do with the bank systems. You've got to remember this is unprecedented times in terms of the amount and volume that they're receiving. And if really honestly, they're not also used to dealing with 50,000 and below.
Yeah. I'd second everything Steve said. I've applied for 2 different banks. Both will process swiftly. The access, the half a dozen or so questions that they ask are very simple, easy questions. The business owner should be able to put their hand to the answers to them very, very quickly. They all were paid within 6 days, similar to the furlough scheme. I think you have got to bear in mind that this is unprecedented. They've put the software through behind the scenes to get it very quickly. One thing to bear in mind though is I've heard of reasons where my businesses went through really quickly, and others they just didn't have the button on their login screen for the bank. You've got to check your mandate. If you have a dual signatory mandate on your facility, that might be the reason why you haven't got the normal button, etc., that's on the screen. So it's not often the bank's fault for why it hasn't worked. It's just the way that you've actually set up your your account, and it isn't one size fits all. But no, I think in the whole they've been good. And the other thing as well, to support Steve and other non-bank funders out there, there are a lot of NAFCB members. There are a lot of FCA registered other finance brokers, etc. There, and they've all been quick to answer their emails and their phone calls if you do want to ring them. There are lots of people out there who are willing to help. So no, I mean, it's tough though if you are a business owner and you're having to one hand juggle furloughing staff and potentially furloughing yourself as well, and having to worry about when you unfurlough, when do you bring people back to work, and the health and safety element of it. There's a lot to deal with.
Thanks, Andrew. The banks took a lot of stick after the last recession, as we know, about not lending and being very cautious about lending, and probably rightly so, as it turns out in the end. But I just want to ask the panel now what access to finance will look like in what is being called the new normal. I know you're being asked to look into the future again, but how do you think this is all going to pan out? And in say a year's time, what will a company have to do to access finance? Chris, can I come to you first?
Well, it is very much crystal ball time, as you say. I think a lot will depend on the experience of the current situation. I mean, one of the questions there picked up whether the government is going to be left with a lot of unpaid debt. The banks are going to be left with a lot of unpaid debt. I think it's unprecedented the way that this lending has been made, allowing businesses, particularly with the new bounce back loans, to effectively get that lending without the bank having to go through its usual checks. In honesty, I can't see that continuing. I think that we will go back to a more regulated way of lending. But I think Steve, as the finance person on the group, and Rosie is probably more qualified to talk on that than me.
Rosie.
So, yeah, absolutely echo the bank regulation was too lax in the run up to the financial crisis. It's now much more regulated. I don't think people are aware that we have about over 1,000 people employed at the Bank of England whose job it is to watch the banks. I used to have a full-time job watching one of the building societies. For the bigger banks, they've got teams of about 10 people watching all that they do. So we need to make sure the financial system is secure, because the financial system of the UK depends on the banks. A lot of people in the last crisis lost jobs, lost livelihoods because the banks weren't secure enough. I don't see us going back on the system of regulation and risk aversion and carefulness about what we lend. But there is a balance, because also the economy needs the banks to be available to provide finance at times like this. So it can be an awkward balance, but we're getting there, and I think this current crisis is going to teach us and the banks a lot. Thanks,
Rosie. Steve.
There's a degree of irony here, isn't there, in that the alternative market that's actually spread out and to basically service where there are gaps, basically have a difficulty and now rely upon the banks lending to the small businesses, because the future in terms of alternative and spread of offers to small businesses will depend upon whether the banks lend to the small businesses now and make sure that they survive and have the opportunity to grow. Because it's the existing portfolios of the likes of the alternative funders that is got that in actual fact is the problem. It's not necessarily the new loans, it's what's actually already been lent, and you need those businesses to survive and come out of this, whatever it is, to be able to go forward. If that doesn't happen, then I think the scene, as you mentioned, could be very, very, very different in 12 months' time.
Thanks, Steve. Well, the time's nearly run out, but finally, I've got a final question from an audience member. Andrew, you run businesses in very different sectors. The question here, what is the general level of confidence out there that the local economy will bounce back from this? Andrew?
I'm generally a half glass full person. So going in 7 weeks ago, I was saying that we would probably come out of it with a bit of a champagne cork. I was using that phrase quite a lot. Obviously hopeful that it would be like that. I'm thinking now it's going to be more protracted. It's going to be potentially, I mean, it's all related. When all's said and done, it's all going to be related to a vaccine, isn't it? Well, I know we're talking here about finance and business, but the whole crux of this is it's all related to a vaccine. Whether or not that vaccine comes, realistically, it's going to be second, third quarter next year, and we're dealing with the new norm until then. The key is being safe until then. We covered it off, and I know we're talking about taxes. I do think the right way to fund all of this is through VAT, so that everybody in the country pays an element of it, because individuals who have been furloughed and been not made redundant and have been funded to have 80% or topped up by their employer have had the benefit of that. And that tax is linked to how much you want to spend in the future. If you're a conservative person and you don't spend a lot, you're not going to be penalised as much. But I do think, I do think that if we stay safe and we stay, not getting political here, but if you do stay alert and you do things wisely and carefully, we will come out of it well. And as I said, there will be winners and losers. And if you are a business owner and you are a strong business owner, you take calculated risks, the finance is there available now, take it, and you should see your business succeed in the future. The pace that the business world came out post-Brexit, early December, mid-December last year, incredible. And clearly the momentum is still there to get this country moving again, and fingers crossed it will.
Thanks, Andrew. Rosie's cat upstaged you slightly at the end there, but thank
He wants feeding.
Thank you.
She does, exactly. She's demanding a dinner.
Thank you. Sorry, Rosie, go on.
So businesses I talked to are very much looking forward. There was very much a mood early on in the crisis of how do we survive? How do we survive financially? Cash flow is a huge concern. The majority of conversations I have now, I'm prompted by me looking forward to the future. So how do we get back? How are we getting back? And what are our projections for the rest of this year? And there's quite a positive mood out there. It's seen as challenging, and the return of the way the furlough scheme is managed by the government seems to be an absolutely key factor in all this, because it will have an influence on how businesses survive. But yeah, generally, I think businesses are looking forward now. Our official, we don't have forecasts because the level of uncertainty is so high, but we've got a plausible scenario we've used, and that suggests that by the end of next year, output of the UK will be similar to what it was going into the crisis. The East Midlands is in the middle of the country. It's a bellwether. It's got a very good spread of businesses. I think we'll be in a similar situation locally if that scenario comes out. But I agree with Andrew, it's about a vaccine. That's the key.
Okay, guys. Time has beaten us. We'll let Rosie go and feed a cat, I think. Thank you all for taking part. It's been really, really useful. We've got some questions left over. Just to people who haven't had their questions answered, I will forward them to you all if that's okay. And you can get in touch with those people yourselves. Thank you all for joining us, and thanks again. Thank you.